Hey guys, welcome back to another stream, day 74 of Intelligence Magazine. Yeah, so I streamed earlier, but accidentally showed something I shouldn't have, so decided to end the stream and also delete that video. Let's see. Yeah, I think it should be gone now. I'm gonna double check if I can still see it. Okay, yeah, I think it's good now. So basically, in the previous stream, I was building out this preparation outline for an upcoming session that I have to tutor financial accounting, and I think what people are talking about in class right now is kind of the basics of accounting entries on balance sheets. So this is one of the core topics of the in-class practice problems, and I think that it'll be helpful to go over some of these as practice problems during our sessions. Alright, okay. And so, chapter 1... Okay, so this probably has to do with the cash flow statement. Owner's claims on assets, retained earnings, paid in capital. Yeah, so I think this account refers to owning issue stock. Most of the stock is recorded at par, so at par usually means either a dollar or a cent. But when you have, let's say, Apple stock that's currently IPOing at $20, so if you record $1 of par, you also have the $19 of paid in capital to represent the $19 per share that you're getting on top of par. So, distribution of cash. Shit. Okay, so I guess this is actually pretty helpful for yeah, this is actually pretty cool graph. So this really is a momentum type. I don't know exactly how they're choosing the investment here. So end of chapter 1. Tell face up, let's go. Okay, so I think then core topics. So basic introduction to core counting equation. So assets is equal to abilities plus equity. This is a must. This will get burned into that is like the fundamental creme de la creme equation that you need to remember in this class. Okay. And introduction to core financial statements. So this will be the income statement, balance sheet, cash flow statement. Okay, so income statement, performance of company through time, balance sheet, say snapshot of company, financials, specific time, and then cash flow statement. Detailed flow of cash, money going in and out of the business through time. Super cash flows does this. Investments and lending decisions. So economic activity shapes creating accounting judgments useful for consequences. Okay, statement of stock versus equity. This is something actually I'm not super familiar with. Change retained earnings balance caused by net income. Okay. Statement of stock holders. changes in equity accounts, including change in retained earnings. So costs by net income and dividends. Okay. So understand the types of transactions that affect categories of items in the financial statements and what types of under the hood. To measure business activities of a company and to communicate those measurements to external parties for decision. Okay. So I think I also want to see, there's like this McGraw-Hill textbook that they're using, and I want to be able to do some of the homework exercises. Okay, so the homework here. Select the type of business activity, finance, pay amount owed to the bank for previous borrowing, finance, utility costs, operating, so investing, provide services, operating, purchase of supplies, operating, purchase of building, do investing, pay for salary, operating, pay for research and development costs, investing, test, financing. Oh, actually no, so this actually should be operating. So common stock to investor, yeah. Okay, so check my work. Okay. Ooh, turn a question. So I'm thinking one step ahead, right? Because you think about this as, I was thinking about like capitalizing it. Okay. R&D, okay. All right, turn. Is that it? Oh, wait. How do I? Oh, there we go. Okay. Stockholders' equity, revenue, expense, revenue, dividend, common stock, stockholders' equity, equipment, assets. Expense. Oh, wait. Payments owed to employees. Okay, no, this should be a liability. The actual act of paying it should be an expense. So service revenue, sales of service to customers. So that should be revenue. Oh my god. office expense. Yep. Supplies. So this is gonna be an asset. Oops. Research and development expense. So it's gonna be expense. Land. So it's an asset. Tax payable. It's gonna be a liability. Interest rate payable. Okay. So it should be work. All right. Following amount addition, the company has a common stock of 32,000 beginning of the year. Issued an additional 3,200 at the end of the year. Okay, income statement. So something like this. So this should just be service revenue. 600. Okay, nothing else. And then salaries expense. Right, and delivery expense. And rent expense. Okay. Yeah. Delivery expense. Oh, I should have done rent. Okay. Okay, so salaries expense, we have 52,600, and it's payable. Delivery expense 1,500, 470. Okay, so beginning balance 32,000. So retained earnings 1,600. Total stockholders. So we add the two together, we get 4,800. All right, so we got additional. Issuance of common stock. So we have issuance of common stock, right? Of how much? 3,200. And I think they had a net income, right? So to their retained earnings, they didn't pay out any dividends. So 4,600. Let's see. Net income 4,600. Okay. And then assets. So we have cash. Okay, so I think this already reflects exactly. The effects of what has happened. So, billings. Supplies of 600. Okay, so salaries payable. And what else is there? Accounts payable. We have 3,600. I think that's it. So billings, salaries payable, got that. Okay. So let's do stock issuance. Common stock. And then retained earnings. Okay, so common stock was 35,000. 35,200. Right, and then 21. 21,400. Okay, so all balances. Yep, I think. Let's check. It's complete incorrect. Nice. Balance in retained earnings represents. Okay, so without even looking at multiple choice, they should represent how much money is kept within the business or how much profits is kept within the business. Minus students paid. Okay, yeah. Should not work. Nice. Financial statement that shows it's called the balance sheet. Alright. So salaries, expenses, I guess we could probably find that from balance sheet. Okay, add net income, utilities, advertising. Okay, so where are we getting the salaries from? Oh, okay. I guess we can find it from here. So, I see. Okay, we can work backwards. So we can find the net income here, then work backwards by bringing the net income there, and then bringing the salaries, calculating it that way. So if we add net income, if we take 5,100 minus 1,100, that'll give us 4,000. So 4,000, that means we have 4,100. Okay, and then 4,100. So this should give us 5,200 plus 13,200. So that should give us, yeah, the amount. And then we have 4,100. Oh, shoot. Salaries, and then we take 29,500, subtract. This will be 6,200. 29,500 minus 6,200. So 9 minus 6 is 3. 23,300. Okay, so retained earnings, we took 8,100. And 5,000, right, 9,200. Okay, so we have 13,300 and stockholders' equity. So what we want to do then is take 19,950 minus 17,300. So that gives us 2,000 and 650. 550. And then this will be the exact same, so 1950. Let's do quick math. So no, this doesn't add up, I don't think. This doesn't add up to 900. $2,650. Yeah. Okay, so maybe I did the math wrong here. Yeah, let me just bring out a calculator. Minus 400 minus 100. So this is equal to I think I gotta subtract this again. Yeah, 19,200. Okay. Just that would make it. That would bring it down to 0. Okay, nice. Alright, I think I might have to go soon, just because the dining hall closes, and I gotta see. Okay, yeah, not entirely sure. But save and exit for now. Continue, exit now. Let me see. So there's every week. Okay, so that will be the end of this week. All right, nice. So all of these are weekly. Are they? So 7. Yeah, every week. All right, that's good. Yeah, that's good. So I can just finish them at the beginning of the week and then work on prepping. So I think with that, gonna end the stream here. Gonna go eat, come back, and then I think probably work on Intel for a little bit. Also probably the due diligence for another project. So thanks for tuning in. Catch you guys in the next one. Peace.